Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Bashardovez. As markets wait anxiously to see how far the latest conflict between Israel and Hamas will escalate, Fed policymakers provided some soothing words to jittery investors already caught wrong-footed by the recent surge in yields. The relentless rise in long-term borrowing costs since the summer expanded the rout in bond markets to equity markets, stifling risk appetite. But with the next FOMC decision only 3 weeks away, the Fed is taking stock of financial conditions amid the lack of clear signals from the economic data. The first clue to a possible turnabout in policy came to light last Thursday when San Francisco Fed President Mary Daly suggested that financial markets have done the work for the Fed. Speaking on Monday, both Fed Vice Chair Philip Jefferson and Dallas Fed Chief Lori Logan also implied that the recent tightening in financial conditions amounts to an additional rate hike. For the markets, the not-so-hawkish comments on the back of Friday's super strong jobs report couldn't have come at a better time, as stocks have been tarnished in recent weeks from the repeated higher-for-longer message. The 10-year Treasury yield dipped from Friday's close of 4.78% to a low of 4.62% on Tuesday as trading resumed for U.S. Treasuries. European government bond yields have also retreated from last week's decade highs, pulling regional stock indices sharply higher today. On Wall Street, shares rebounded for a second day, and futures point to further gains today. It seems that the conflict in Israel and Gaza has been a boon for energy and defense stocks. As for oil prices, WTI and Brent crude futures are paring their losses from earlier in Tuesday's session, indicating ongoing upside momentum despite the initial panic from the weekend headlines having faded. Gold is also holding on to most of its gains. The very modest pullback in crude oil and gold suggests there is still some unease regarding the volatile situation in the Middle East. In the meantime, the mood was somewhat lighter in FX markets, as the safe haven US dollar and Japanese yen were both softer on Tuesday. The euro edged up above $1.06, even as ECB policymakers signaled that rates have likely peaked, while sterling clawed above $1.2250 ahead of monthly UK GDP readings on Thursday. Thanks for watching today's market comment here at XM.com.